Okay, so let's imagine you're starting from absolute scratch with investing. What would you do? I've definitely made my share of mistakes over the years, so in this explainer, we're going to walk through the exact playbook to build real confidence, avoid all the traps that catch beginners, and really get you on the path to financial freedom. All right, let's jump in.
So, you're thinking about investing this year? That's awesome. You are in the perfect place. We're about to lay out a really simple, clear roadmap. But before we even think about buying a single stock or anything like that, we have to deal with a really important reality first.
This number might look simple, but wow, it represents a huge hidden problem for millions of people. Nearly 40% of adults can't even cover a $400 emergency. That right there is the financial quicksand that makes people fail at investing before they even get started. Because when life happens, and trust me, it will, if you don't have cash set aside, you're going to be forced to sell your investments at the absolute worst possible time. And that leads us right into the most common traps that snag so many new investors. You know, the biggest mistake isn't picking the wrong stock. Not even close. It's trying to build a skyscraper on a foundation of sand. This quote just nails it perfectly. Think about it, right? Your investment account is the hot water bottle. The money you put in, that's the water. But that high-interest credit card debt, that's just a big ol' hole in the bottom. You can keep pouring money in, but it's just leaking out as fast as you can pour, maybe even faster. And the math here is, well, it's brutal. It's simple, but it's brutal. Your credit card might be charging you, 25% interest? Meanwhile, the stock market, over the long run, might give you an average of 10%. It's a battle you just can't win. You're losing money to debt more than twice as fast as your investments could ever hope to earn it back. So paying off that debt, it's not a chore. It is the single highest guaranteed return on your money you will ever get. Period. So how do we patch that leaky bottle? Simple. We stop pouring for a second and we build a solid financial foundation first. And this isn't just a friendly suggestion. It is the non-negotiable first step. This is what gives you the power to invest with real confidence for decades to come. So here's the playbook. 3 things you have to do before you invest a single dime. Number 1, aggressively, and I mean aggressively, pay down all of your high-interest debt. Number 2, build an emergency fund, enough to cover 3 to 6 months of your essential bills, and just keep it in a plain old, easy-to-access savings account. And 3, get a real handle on your budget, so you know exactly how much you can invest each month without feeling stressed about it. And here's a crucial mindset shift. This prep work isn't a delay. It's not a detour. This is level 1 of the game. This is the bedrock that gives you the psychological freedom to stay invested when the market is going crazy, to ride out the storms, and to let time do all the heavy lifting for you. A key part of this whole foundation is just giving your money a specific job. Any money you're going to need in the next 5 years or so, for a down payment, a car, whatever, that money belongs in cash, safe from the market's ups and downs. But money for goals that are way, way down the road, more than 5 years away, that's the money that gets invested. The market is choppy day to day for sure, but over the long term, that's where the real growth is.
All right, your foundation is built. The bedrock is solid. Welcome to level 2. It is finally time to invest. And you know what the best part is? It is way, way simpler than everyone makes it sound.
The engine behind all serious wealth is this one beautiful idea: compound interest. It's like this quiet magic that happens when your money earns a return, and then that return starts earning its own return. It's a tiny little snowball that, given enough time, rolls into a massive avalanche. Let's make this totally real. Let's say you invest just $100 a month. After 30 years, you've got over $140,000. Now, here's the part that'll blow your mind. You only actually put in $36,000 of your own money. The rest of it, over $100,000, is just growth from the market. That's the staggering power of starting small, being consistent, and just letting that compounding engine run. So if compounding is the engine, what's the fuel? What do you actually buy? Well, the guiding principle here is diversification. Just think of it like a balanced dinner plate. You wouldn't just eat a plate full of bread, right? You need some protein, some vegetables, a little bit of everything. Investing is exactly the same. You never ever want to bet your entire future on just one company. And the simplest, most effective way to build that balanced plate is with something called an index fund. Instead of trying to find that one winning needle in a giant haystack, an index fund just buys you the entire haystack. You get a tiny piece of every major company in the market, like the 500 biggest companies in the US. The wins here are just massive. 1. With a single click, boom, you are instantly diversified across hundreds of companies. 2. They are incredibly low cost, so fees aren't eating up all your returns. And 3. You're not trying to beat the market anymore, you become the market. And history shows that's a fantastic strategy. Okay, now for the final and maybe the most important piece of the whole puzzle, mastering the right mindset. This is where we shift from what to do with your money to what you need to do with your brain. And, surprisingly, it's less about action and a whole lot more about inaction. This is one of the weirdest but most powerful secrets in all of finance. To get great results, your best move is often no move at all. The investors who are obsessively checking their portfolios every single day, they are almost always the ones who get the worst results. You want proof? There's this famous study from Fidelity. They looked for their best performing accounts, and they found they belonged to two groups of people. People who had died and people who had forgotten they even had an account. I mean, the message is pretty clear, right? The less you mess with it, the more your money grows. So how do you become a top performer without, the more extreme options? You automate. You set up a transfer from your bank account to your investment account for the same day you get paid, every single month. It removes emotion, it removes willpower, it just happens, building your wealth quietly in the background. Now, let's talk about the scary part. At some point, the market is going to crash. It's not an if, it's a when. In fact, over the last 150 years, there have been 19 major market downturns. They are not some freak accident. They are a normal, recurring part of this whole journey. But that number is only half the story. Here's the other half. Every single one of those 19 times, the market has recovered and climbed to new all-time highs. This is exactly why we built that foundation back in level 1. It's your panic-proof vest. It gives you the strength to be patient when everyone else is freaking out. So let's just zoom out. What have we really laid out here? Investing success isn't about stock tips or some secret formula. It's about a simple, repeatable process that puts the incredible power of time on your side. This is your map. 1. Build your financial fortress. No debt, emergency fund at the ready. 2. Start simply and consistently with low-cost index funds. 3. Automate the entire system. And 4. Master the profound art of doing absolutely nothing. This isn't just for Wall Street wizards or people with PhDs in economics. This is for you. The process we've laid out is your path to building real, lasting wealth. You have the map. The only question is, what's the first small step you're going to take to begin the journey?